What is a shark's favorite kind of company? Fintech. I thought that joke was pretty phenomenal. Don't worry, those are actually my only two shark jokes, for now. If you're new to ticker symbol U, or this is just your first State of the ARK, welcome. The State of the ARK is a quarterly series where I analyze the last 90 days of ARK Invest's daily trading data. I'm looking for the companies and trends that Cathie Wood and her team feel will provide the best returns 5 years from now, given today's valuations. Since there's just too much to cover in a single episode, I've split the State of the ARK into a few episodes, which I'm releasing around the end of the quarter. I'm calling the whole series ARK Week. So, welcome to ARK Week. Part 1 covered the biggest changes to ARK Invest's combined positions. This is part 2, which will highlight some of the biggest buys and a pretty interesting inconsistency between ARKW and ARKF, ARK Invest's funds themed around the next generation of internet applications and fintech innovations, respectively. You can watch these episodes in any order, and timestamps are always enabled for your convenience. Your time is valuable, so let's get right into it, starting with this very interesting inconsistency. Fair warning, I'm about to cover a lot of stocks in a way that may not add up, so as I walk through the data, feel free to comment below if there's something that I'm missing. I'm not here to be right, I'm here to become a better investor. Let's dive into it, starting with ARK Invest's divestment from Chinese companies over the last quarter. The x-axis on this plot is time since July 1st, 2021. The y-axis shows the total dollars that ARK Invest held in the company for the selected funds, and right now I'm talking about all 6 ARK Invest funds combined. The latest round of regulatory crackdowns by the CCP began on July 24th and focused on online tutoring companies as well as for-profit tech companies that collect sensitive consumer data. Tencent, KE Holdings, Alibaba, and many more of ARK Invest's Chinese holdings were affected by these regulatory crackdowns. Let me quickly go through each fund one by one. These holdings never existed in ARKG. That was easy. ARKX is a brand new fund that launched 6 months ago, so it's still very tiny. So let's cut the y-axis by 90% just so you can see the small Chinese holdings that were in ARKX since its inception 2 quarters ago. Meituan, Tencent, and Alibaba all got dropped from ARKX this past quarter. JD is often thought of as the Amazon of China because it's the #1 direct online seller in China and operates its own logistics and delivery network that carries packages for other sellers. JD also operates the 7 Fresh supermarket chain, kind of like how Amazon has Whole Foods. There's a lot more to JD than that, just like there's a lot more to Amazon, but this is at least a good starting point. I think JD.com was in ARKX as a beneficiary of space-based technologies like satellite internet, but dropped in weight significantly when JD Logistics was spun out as a separate stock in late May, before getting sold out completely during the crackdowns at the end of July. Now, the only Chinese stock still in ARKX is JD Logistics, and it's a top 10 position in the fund. Let's move on to ARKQ, ARK Invest's Autonomous Revolution Fund, which is actually their smallest fund besides ARKX. No surprise here, we can see the same sales of Tencent and Alibaba, while there's a big uptick in JD.com and a little one in Baidu. Here's why. It turns out the CCP isn't cracking down as much on companies that focus on things like logistics and delivery, robotics and automation, grocery shopping, and agriculture. That's why companies like JD.com, JD Logistics, and even Pinduoduo appear to be relatively safe, for now. So, my guess is Cathie Wood still holds a little bit of Baidu inside ARKQ because it's trying to grow its non-advertising revenue and grants the fund exposure to Chinese electric vehicles and self-driving technology. I think it's important for us as investors to realize that not all Chinese tech companies are the same, and there could still be some opportunities in that market. Otherwise, these positions would have been dropped entirely, right? So let's move on to ARKK. Because stocks from every innovation theme compete to be in the flagship innovation fund, Cathie Wood has a lot more stocks to choose from and doesn't need to expose the fund to Chinese regulatory risks if she doesn't want to. So the only 2 Chinese companies in ARKK at the start of the quarter were Tencent and KE Holdings, both of which have been dropped from the fund. With all that context, let's turn to ARKW. Cathie Wood exited every Chinese position she had in ARKW, including JD.com and Pinduoduo, both of which are seemingly in the good graces of the Chinese government. What that tells me is that there are better opportunities that fall under the theme of next-generation internet applications outside of China, which makes sense because the global winners in that market will be the ones with the most data and the highest quality data. If Chinese tech companies are limited in the kinds of data they can use, whether it's by geography or by the actual information they're allowed to store and process, there's no way for them to compete against companies with much broader and much deeper data sets. Here's the problem. That theory doesn't hold up if we look at ARKF, ARK Invest's Fintech Innovation Fund. ARK Invest sold out of KE Holdings, Alibaba, Ping An Healthcare, and any other company that aggregates lots of sensitive consumer data, but not JD.com, Pinduoduo, or Tencent. Don't get me wrong, all of these companies have significant payment processing capabilities and financial services. Earlier this year, JD.com sold its cloud and artificial intelligence business to its fintech unit for over $2 billion. I'm guessing that's why it's in ARKF, at least until it spins off JD Fintech like it did with JD Logistics, if that ever happens. Tencent has WeChat Pay, which is responsible for something like 40% of all mobile payments in China. But Alipay, Alibaba's mobile payment solution, has over 50% of the market share, and Cathie Wood still dropped it from ARKF. So why is Tencent still in the fund? Tencent is a holdings company with hands in literally everything, so maybe one answer is because Tencent also owns over 15% of both Pinduoduo and JD.com, but I'm not convinced that would be why it's still in the fund. And then there's Pinduoduo itself, which is not only one of China's largest e-commerce platforms, but it's an agriculture-focused, mobile-only social commerce platform that connects farmers and distributors with consumers directly through an interactive, group-based shopping experience. If you go check out ARK Invest's fund page for ARKW, Pinduoduo fits at least 3 of the 6 technologies that ARKW focuses on: e-commerce, mobile technology, and social platforms. As of late last year, Pinduoduo does have its own payment solution called Duoduo Pay, but I don't really think that qualifies it as a fintech company. Altogether, JD.com, Pinduoduo, and Tencent make up a little over 5% of ARKF today, or a little over $190 million, while no longer being an ARKW at all. The reason I'm comparing ARKF and ARKW so much is because they actually overlap by a lot. In fact, of the 38 stocks in ARKF, a whopping 18 of them are currently in ARKW, which makes sense, since many next-generation internet applications focus on removing the friction associated with financial transactions or other forms of value transfer. Think about peer-to-peer lending, digital wallets, blockchain technology, contactless mobile payments, and using artificial intelligence to calculate risk, interest rates, insurance premiums, and so on. That's why ARKF is filled with companies like Teladoc, Opendoor, and Intuit. These companies focus on providing a professional service, doctor appointments, real estate, managing a business, but without all the friction that comes with doing them in the physical world. As a result, stocks like Coinbase, Robinhood, Square, PayPal, Shopify, Teladoc, and Draftkings are both in ARKF and ARKW. That's one reason for my confusion around why Cathie Wood kept JD, Pinduoduo, and Tencent in ARKF, but sold them out of ARKW. Comment below or tweet me at tickersymbol U with your thoughts on these companies. Is there some difference between financial data and consumer data that would allow these companies to win despite increased regulations? Can we really separate things like WeChat Pay from the rest of Tencent and hold it in ARKF without worrying about the rest of the company? While I do think all 3 are great companies overall, the real question I have about them is, are they actually good enough to be fintech companies held by Cathie Wood in ARKF? Or is there currently a real lack of publicly traded, pure-play fintech companies that ARK Invest thinks are undervalued? I'm starting to think it's that second one. Let's get into the trading data for ARKF, and I'll show you why. Here's the table of Cathie Wood's positions inside ARKF. Each row is one stock, the rows are ordered by that stock's position in ARKF, and the rows are colored by the change in position over the quarter relative to the change in ARKF's assets under management. The total amount of money in ARKF shrank by about 14% since the start of the quarter. So, positions that are in white shrank by around 14%, right in line with the fund. Green rows show positions that shrank by less than 14%, meaning they grew relative to the fund. And red rows shrank by more than 14%, meaning they shrank relative to the fund. Since Cathie Wood can't control the prices of most of the stocks she buys yet, the first column shows the percent change in her share count, and the second column shows the percent change in the share price, which are the 2 things that affect the total position size of each stock. The numbers on the right show you each stock's rank in the ETF and how that rank has changed over the quarter, as well as its rank when you combine all 6 ARK Invest ETFs. Lower ranks are always better. For example, Tesla is always rank 1 in each fund that it's in since it's the biggest position. Using this framework for analyzing ARK Invest's data, all we have to do is look for the darkest green rows. Simple, right? So here's why I think there may be a lack of undervalued, publicly traded fintech companies. The biggest position increases in ARKF are UiPath, ticker symbol PATH, and Teladoc, TDOC. In both cases, the stock prices fell by a little over 20% over the quarter, and Cathie Wood has roughly 2.5 times as many shares of these companies in ARKF as a result. Right under those two, you can see that Cathie Wood shrank her position in JD.com by about 43% over the quarter, and it's still the 13th biggest holding in the fund. Her positions in Square, ticker symbol SQ, PayPal, PYPL, C Limited, SE, and Mercado Libre, ticker symbol MELI, all shrank by at least as much as ARKF overall, if not more. When I think about traditional fintech companies, those are the exact names that I think about, and here they are being sold out of Cathie Wood's Fintech Innovation Fund. If we go further down this table, we can see that the biggest changes were actually new entries into ARKF. Robinhood, ticker symbol HOOD, IPO'd at the end of July. That's a good fintech stock. Then we have Etsy, ticker symbol ETSY, Palantir, PLTR, and Farfetch, ticker symbol FTCH, which is an e-commerce platform focused on digitizing the high-touch experience of shopping for luxury fashion. The reason these rows aren't darker green is because they weren't in the fund at the start of the quarter, so there's no starting value to compare them to. So Cathie Wood added $45 million worth of Palantir and $50 million worth of Etsy to the fund, which are much bigger increases than the $15 million or so added to Lending Club, or even the $40 million added to their position in Coinbase, both of which are much closer to being fintech companies in my opinion. So to sum up some of the biggest additions to ARKF over the quarter, we have Teladoc, UiPath, Etsy, and Palantir, while Chinese companies like JD.com, Pinduoduo, and Tencent are all still in this fund. Are you starting to see what I'm saying about the lack of fintech stocks? The one fintech stock I do really want to point out here is Stone, ticker symbol STNE, which is only inside ARKF. Stone is a Brazilian fintech company that helps businesses move away from cash payments and into the digital economy by facilitating transactions in-store with point-of-sale systems as well as online through their e-commerce platform. Stone also has a brand called Ton, which provides similar services for tiny businesses and individuals who are just getting started. It has low fees and provides digital accounts to receive payments for business owners who aren't yet in the banking system. If you've watched some of my recent episodes, you'll see that I've been focusing on fintech in emerging markets like Southeast Asia and Latin America, and Stone fits this bill perfectly. Stone is also one of the only companies that's held by both Cathie Wood at ARK Invest and Warren Buffett at Berkshire Hathaway. Warren Buffett has over $600 million invested in Stone, and it's currently trading for half the price that it was at the start of the quarter. I will definitely be doing a deep dive on Stone after ARK Week. Because these funds overlap so much and Cathie Wood sold out of her Chinese stocks in one but not the other, one thing we can do is check out what changed inside ARKW to see what she added there but didn't add to ARKF. That should tell us at least where some of the money that was in JD, Pinduoduo, and Tencent would go instead, right? So here's a table of Cathie Wood's positions inside ARKW. The total amount of money inside ARKW shrank by about 14% since the start of the quarter, just like ARKF, so this table is colored the exact same way. Again, some of the darkest green rows are Coinbase, Draftkings, UiPath, and Robinhood, same as we saw in ARKF. Then we have Disney, ticker symbol DIS, probably because of Disney Plus, which is their streaming service. A little bit further down the fund, we have a whole bunch of new additions, including LivePerson, LPSN, Farfetch, FTCH, Genius Sports, GENI, Colsa Ventures Acquisition Corp, KVSB, and Concord Acquisition Corp, CND. Since your time is valuable, and I'm pretty sure you know what Robinhood and Disney do, I won't talk about them here. LivePerson, ticker symbol LPSN, is a software-as-a-service provider that develops customer engagement and conversational commerce applications. They use artificial intelligence to let consumers ask questions that they would ask to a live person. and make purchases in the messaging channels that they already use every day, like Facebook, Instagram, Twitter, SMS text messages, WhatsApp, and WeChat. So they're a business communications platform that works across many different industries, verticals, and geographies. A classic ARK Invest stock if I've ever seen one. Farfetched, ticker symbol FTCH, is that e-commerce platform focused on luxury fashion that I mentioned earlier. The company has 3 parts. It has 2 big marketplaces. It has a digital platform that includes marketing, inventory management, payments, fulfillment, and customer service, and a brand platform where businesses can actually design, produce, and distribute their goods. So, Farfetched is an end-to-end online ecosystem specifically for luxury fashion. Genius Sports, ticker symbol GENI, is a sports data aggregator and software firm. They're a system that collects data from professional sports leagues and college conferences and distributes that data to everyone from fantasy football leagues to casinos. Genius Sports has deals to collect data from the NBA, the NCAA, FIFA, PGA, and NASCAR, and some of their clients are Caesars and MGM Resorts, as well as Draftkings. They have something like a 40% share of the sports data market, with a company called Sportradar capturing the other 60%, but Sportradar isn't a publicly traded company. Colsa Ventures Acquisition Corp. 2, ticker symbol KVSB, is a special purpose acquisition company bringing Nextdoor public. Nextdoor is a social media platform for neighborhoods. The idea behind Nextdoor is to allow neighbors to communicate with each other, share information about what's happening in their community, and organize local events. Nextdoor also has a business page that lets people promote their company locally by interacting with members of their neighborhood and the surrounding areas. Nextdoor's chief executive officer is Sarah Fryer, who used to be the chief financial officer of Square. Small world. And Concord Acquisition Corp., ticker symbol CND, is the SPAC bringing Circle public. Circle is a global fintech firm that provides payments and treasury infrastructure for internet businesses to help them take advantage of the shift to digital currency and the blockchain-powered global financial system. Circle is the principal operator of USDC, the USD coin, which has grown to more than $25 billion in circulation and has supported more than $785 billion in on-chain transactions.
Circle sits at the center of the next major transformation that the internet is bringing to the world. This fundamental transformation of our economic and financial system with the power of digital currency and blockchain technology.
Excuse my language, but why the heck is Circle in ARKW but not in ARKF? I triple checked to make sure. That's 6 checks, it's definitely not in there. So, there you have it. Not only did the Fintech fund keep some Chinese stocks that Cathie Wood sold out of in every other ARK Invest fund, but it also picked up a lot more Teladoc, UiPath, Etsy, and Palantir, while ARKW ended up holding the fintech company responsible for one of the biggest stablecoins on the planet. I know this is ARK Week and all, but the fintech fund is starting to look a little fishy. Don't worry, I'll cancel my comedy tour. All kidding aside, I put together a presentation of all the changes inside ARK Invest funds over the quarter. You can check them out for yourself at tickersymbolyou.com using the link on your screen right now or in the description below. Let me know in the comments or tweet me at tickersymbolyou if I'm missing something on these changes between ARKW and ARKF or with any of the other stocks that I've covered. I don't always get it right, and I'm excited to hear your thoughts. Thanks for laughing at all my hilarious jokes, and until next time, this is Ticker Symbol You. My name is Alex, reminding you that the best investment you can make is in you.